Hey guys, and welcome to the Working Money channel. Flip the chain here, bringing this up, an old David Schwartz Quora post that I thought I would bring to the XRP community because I know, more people are entering the space and may not realize that, a lot of these questions have been answered in the past. I mean, if you're new to the space, you may not have seen this. I know for all of you guys that have been here for a while, you may already understand this question. And I mean, it is rooted in this fact that, the circulating supply of XRP is still only at about halfway, 54 billion tokens. Now, when you compare that to circulating supplies of other cryptocurrencies, it might look like a lot. Some people have been advocating for burning the escrow, right? To get rid of these XRP so that our XRP is worth more. But guys, there's a reason for this. And, at the end of the day, if we want XRP to command those high prices, yeah, we could get that initial spec move if we did burn the escrow. But at the end of the day, what XRP was really created for, and by the way, nobody's burning any escrow. What XRP was originally created for was to help to help solve problems, to help move money. Built on the XRP ledger, it can basically move anything of value, boom, like that. And so when David Schwartz answered this question a few years ago, he considers a scenario where the consumption of XRP for meeting the expenses surpasses the XRP held in Ripple's wallets, where all the XRPs are already released into Ripple's wallets. In such a scenario, Ripple could even shut down its company. He even said, however, such a scenario is not possible since Ripple already has its stream of revenue sources like the CBDC platform, for example, digital asset custody businesses like Metaco, which they recently acquired. And at that point, Ripple had not even purchased Metaco. But here's the original Quora post. What will happen when Ripple's XRP escrow runs out? So David Schwartz responds, guys, here it is, the official post. Each month since the escrow began, Ripple has put back into escrow the unused portion of the funds released from the escrow. So he's even saying, based on how the system has been from the beginning, they have had to put XRP back into escrow. And I'm hoping that at a point we're going to see that number taper off, that they will actually need more XRP in the ecosystem to facilitate some of these transactions. This means that the escrow could continue for quite some time. At some point, though, Ripple will run out of XRP. If not in the literal sense that Ripple has no XRP at all, in the practical sense that Ripple will have exhausted the initial supply of XRP that was gifted to it by the Ledger founders. At that point, it's theoretically possible that Ripple will just call it quits and fire all its employees. But I think it's more likely that by the time Ripple will have other businesses and revenue sources that will allow it to continue. So David Schwartz mentioned this 3 years ago, and sure enough, here we have Ripple licensing technology to other companies. The original problem Ripple was created to solve was how to distribute XRP. At first, it was simple, just give it to people, but as soon as XRP could easily be traded for cash, so that we got to think before it was listed on exchanges widely, he says that stopped working. All the giveaways were gamed, and you can't just sell it. There isn't any initial demand or functioning market. So weirdly, when Ripple's XRP escrow runs out, I will see it as us having completed our execution of an extremely complex and unexpectedly challenging task. So here he says, it was Ripple's initial plan to get rid of the XRP in escrow, and that was kind of their raison d'etre, so to speak. But guys, ultimately suggesting that, you cannot burn this escrow. The escrow is there for a reason, and it needs to be in the ecosystem. And as soon as all the XRP has been released, doing what it does best, that is when Ripple has, of course, completed their task. Now, they're going to go on and do other things. But for those of you guys wondering about the escrow and maybe some more details about that, I hope that this has helped. Wanted to thank Flip the Chain and, of course, David Schwartz just for that, because I know for some of you guys, this might be new information. But for others, I know it is already common knowledge. Nevertheless, it is good to have a refresher every now and then, especially when we're seeing a new emerging landscape, guys. This one courtesy of Subjective Views here on Twitter. Regulated stablecoins will add massive amounts of liquidity to an e-liquid system. And, this just kind of goes back to this fact of XRP being released from escrow. Right now, we don't have the system in place in order for that XRP to really kind of work in the way that Ripple sees it working. Well, at least not yet. We're working towards that. XRP is going to be part of it, but guys, stablecoins are also going to be a big part of this. So this is Chris Giancarlo, formerly of the CFTC, and he has been dubbed Crypto Dad. He gives his 2 cents on e-liquid markets, talking about stablecoins specifically, how these are also going to play a role, guys, and how this market is going to function in the near future. Dare I say, I don't want to really put a timestamp on it, but coming very, very soon, I think. Listen to this.
Innovation is going to happen. The internet is going to do to finance and banking and money what it's done to so many other things. That's going to be very disruptive. And we at the United States that benefited so greatly from the old-based analog system, unfortunately, we don't have the luxury of saying, it's going to be too disruptive, let's just not do it. It's going to happen. And so we can either, choose to lead, follow, or just get out of the way. And I very much hope we'll lead.
Do you want to say anything about stablecoin regulation, either in the U.S., where it's still a very active topic, or anywhere else? And what are the important things to get right on that?
Well, I very much support a regulatory regime for stablecoins. We need to do it. We need to clarify regulatory boundaries amongst the different regulators. We need to create a good licensing regime for stablecoins. We need to make sure that stablecoins claims of stabilization are accurate. We need to determine what those stabilization mechanisms work, if they're based on the dollar, and how that works. So I'm a big supporter of the stablecoin legislation that's been introduced in the House, with one caveat. I published an op-ed in the Hill magazine where I said there's one flaw in the legislation, and that is it doesn't speak directly to privacy. And we cannot allow stablecoins to become the new social media platforms that governments can pressure to ban otherwise lawful transactions in the same way government leaned on social media platforms to ban otherwise lawful speech. So we do need to address the issue of what stablecoin operators can do with the information they gather and how privacy is protected. And we need to make sure that government licensing authorities cannot use their licensing power to force stablecoin operators to disallow otherwise lawful legal transactions. I think that's the one flaw in the legislation. I will say that one of the big drivers in driving public officials to want to pass stablecoin legislation is the need to augment diminishing liquidity in our government bond markets and to create new sources of demand for government securities in the form of stablecoin operators. One of the unintended consequences of Dodd-Frank, although there are many out there that say they told you so, was that the capital requirements on bank balance sheets have made banks less willing to warehouse government debt than they used to be. And some of that liquidity has been made up by hedge funds and proprietary trading firms. But we've seen liquidity shortages in our government bond market, especially in recent years, including this year. And I think there's a perception out there that a stablecoin industry, a healthy stablecoin, a well-regulated stablecoin industry, will drive greater enhanced demand for treasury securities. I haven't studied that particularly myself, but it's a plausible argument, and it's not an unfair argument. I think stablecoin operators have an important role to play, not just as holders of government securities, but as payment operators. And if we can get the privacy issue right, I think it's a very important. And as I said before, I'd like to see as many forms of digital money systems, dollar-based as possible, in a world where we're going to have those that are yuan-based and those are going to be euro-based. And I think if we get the privacy issue right, people will flock to dollar-based deposits because they know their privacy is safe if it's dollar-based, in a way that it might not be safe if it's euro-based, and certainly won't be safe if it's digital yuan-based.
So a great perspective here from Chris Giancarlo, discussing a lot of interesting points with regards to the stablecoin regulation. Of course, he's pro stablecoin regulation, but also, the fact that illiquid markets are going to suffer if we do have another avenue to onboard more customers. And, if the landscape is tokenized, fully tokenized, or mostly tokenized, we can use those stable coins to onboard those customers a lot easier. So, there's already a liquidity problem in the ecosystem, as Subjective Views points out here in the tweet. Chris Giancarlo does address this, and stablecoins, he doesn't mention XRP, but stablecoins and digital assets like XRP could and will solve for a lot of these problems. Another reason why the escrow is being released at the pace that it's being released, not all at once. Don't want to flood the market, but once the time comes, all that XRP is going to be very, very useful. So wanted to thank Subjective Views here just for posting that. Now, we've also got this, guys, the most recent update from Adrian Treccani, the SVP of Product at Ripple. He predicts that as the industry seeks to move past the issues that plague them in 2023, a new paradigm will emerge. This one courtesy of Michael Branch here on Twitter. As 2023 comes to a close, Ripple shares its bullish outlook for 2024. Adrian Treccani predicts that the industry seeks to move past those issues that plague them in 2023. Global banks and industry giants are aggressively exploring digital asset solutions to meet client demand for efficient, transparent, and on-demand financial services. Guys, I've got the Ripple predictions up here, and I will link this in the description for you. So here are Treccani's predictions. As the industry looks to leave behind the problems it experienced during 2023, a new paradigm is emerging. The crypto industry isn't courting financial institutions as it once was. It doesn't need to. So, this idea of finding, the latest central bank to join RippleNet, those days are kind of behind us now. Now we're finding some new challenging tasks, okay? Global banks and industry giants are actively seeking digital asset solutions to satiate client demand for efficient, transparent, and on-demand financial services. Similar to what we were hearing Chris Giancarlo talk about, this e-liquid market, new challenges now, tokenizing everything. If you guys didn't catch the video I did this morning, I will link it up here. This idea that, most of the global economy is going to be tokenized, that is not even speculation at this point. This is the way it's going. This is what the powers that be have wanted us for a decade now, probably longer, right? So they're demanding this transparent, on-demand financial services. In the last year, we've announced partnerships with several global banks, and in 2024, we expect adoption rates to continue to soar. So we're going to see more adoption, guys, meaning more use cases for XRP. Banks will be experimenting with tokenized assets and need to be able to do so with confidence inside the framework of strict compliance and security protocols, as well as smooth integration. So we are seeing it happen, guys. 2024 going to be a very, very bold year for not just the crypto industry, but for XRP, I think in particular. This is advice from the CEO of Metaco, another one from Adrian Treccani. You don't win markets because you have the best product. You win markets because the market thinks you have the best product. Listen to this.
And the best protection that you can have, and you have an engineering background, so it was very, very hard for me to understand this. You have to create a big marketing powerhouse. I'm an engineer. I always thought you win the market because you have a great product. That's absolutely incorrect. You win the market because the market thinks you have the best product, not because you have it. And how do you get the markets to think that you have the best product? Well, you flood the market with information. And it costs you money. So you have to have the people and you have to have the budget. And so one of the most important things that I didn't do, but I would do in my next venture the day it happens, is I would not raise funds to invest in a big engineering team and a big product team on day one. I would raise to invest in a marketing and sales team and ensure that even before I have a product, the market already thinks I'm the market leader. And that's a very, very difficult thing to get to when you're an engineer and you're Swiss, because Americans are used to selling things they don't have. Well, sorry for the ones that don't do it this way, but that's true in many ways.
Great. This is great. Coming from a Swiss man. So basically, flooding the market with the information. I mean, it is, I think, common knowledge that not only is Ripple flooding the market with information about RippleNet, they've already forged those partnerships. So they're already leaps and bounds ahead of the game, but they do have a superior product. I mean, it's not like XRP cannot facilitate what it is meant to do. And even if somebody comes up with a better, quicker cryptocurrency solution, better than XRP, well, it doesn't matter at this point. Ripple has already forged those partnerships. So XRP is going to be the one that is going to be utilized at scale, on a lot of these levels when it comes down to central banking, transferring value, tokenization, all the different applications that we've discussed on this channel in the past. So I wanted to thank Sento Sumo Saba just for posting that. We've also got this, guys, from XRP Drops. So another one concerning Metaco. So when the big boys are moving, you need to be ready. This is what they're saying here. Eventually, all assets will sit on chain, trillions of dollars of assets. And this one coming from Seamus Donahue. Look who's coming into the space, guys. Here he's talking about HSBC specifically. Listen to this.
Rajiv Tumla is one of our guests. He's the global lead for digital assets. And even at HSBC, a very conservative firm, is looking at this space not as an experiment, but eventually all assets will sit on chain. So the stack they're building now is not, we want to plug in 5% allocation of our clients' assets and deliver them both traditional and crypto. Potentially, every asset they have will migrate onto the stack, so this is their new core infrastructure. So if you're going to have trillions of dollars of assets on this, you need to have that optionality. It needs to be an open platform. Because remember, these guys are coming because the clients are coming. And when the big boys are moving, you need to be ready.
So at this point, it's not even up to the institutions that are going to be digitizing. It's because their clients now want cryptocurrency. And of course, that is going to be spurred on by the Bitcoin ETF. I think a heck of a lot more in the new year. So guys, Be patient, be ready. The market is retracing right now. Maybe a good opportunity to sit back, wait for a nice solid retracement, purchase some of those altcoins that you've still been waiting to purchase. And for those of you guys interested on my trading journey, what I'm picking this time around, you can follow me at patreon.com/workingmoneychannel. It's more than just XRP and Bitcoin, guys. I'm diversifying to maximize profit. This bull run, that's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.